Happy Thanksgiving to all those in the U.S. from Options Tender. Now, if you're not, thanks for joining us here and welcome to Options Tender. We're going to do a video here a little bit different since we're going to have time. We're going to have time to explain a lot of things today, tomorrow, into the weekend, because the market isn't going to do much. So I consider this a 4-day weekend. Even though I'm making videos, I would like to continue the learning experience, and hopefully we can diagram and show you optically what I think the market is going to do. But today we're going to focus on SPX. We're going to go down to the daily time frame on SPY as well. And we're going to look at the bullish and bearish scenario, and even the bullish is a version of the bearish scenario. And I'm going to compare it, I'm going to overlap it with IWM. So IWM, you may even have a trade on Friday. If you need to trade, it's going to be a half day. You might have a trade set up here going into the weekend. So I don't know if that's going to trigger, most likely on Friday, but possibly leading on into Monday. The IWM may have a trade set up. So we'll show you that. And if you're new here, go down to that bottom right hand corner, hit that Options Center logo and subscribe. And the best thing you can do to keep this channel running is to like the video. It's simple, quick. Just take a second out to like the video. And so let's jump into it. We have SPX on the monthly time frame. This is a massive area. I think this top is good. I'm going to say that over and over. I think this top is good. So what we're trying to figure out is, do we have our high or low here? Excuse me, our lower high here? Or do we eke out a new high, but not make an all-time high and have a lower high a little bit higher here? Okay. Is this it? Is this good? I think so. Or do we eke out just a new high here? And that's what we're going to go through, and we're going to show it from the SPX and the IWM perspective. Now, heading lower, targets don't really matter at this point, but I do think we had much lower. 2,500 would be a good area, even lower, even down to the 1,800, 1,700 area, okay? And we'll explain more of that a little later on. In the future, but not right now. Okay, so we're still heading down. We're just sideways here on the monthly time frame. If we do eke out a new high here, we're going to have negative divergence on the RSI, and we'll see what happens with the MACD, but we'll have negative divergence on the RSI. We already have that with QQQ. We have negative divergence. All right, so that's very important. It doesn't mean that the market can't keep going higher and take out the divergence and things like that, but we will have a condition in. So let's go over to the weekly time frame, and you notice same thing with the MACD. If we eke out a new high, we cross over here on a bullish crossover. Most likely, if we turn down, we're gonna make a divergent high there, negative divergence. We're gonna have a high here and a lower high, while have a higher high here. All right, very negative. And we're already overbought conditions on the other indicators, our RSI and the slow stoke. So something to think about. That's why those are the conditions I think that we're going lower. If we eke out a new high, fine. I just don't think we make new all-time highs. We head lower. Okay, so let's go down. Well, let's check out the candles for the traditional technical analysis. And so we had our initial move down here. We broke out from the channel. We continued. This looks like a three-wave move to me, an impulse wave down, and we're back testing this channel perfectly. Did I think we were going to get up here? No, I thought we were going to be held by the MAs and things like that, but we're back testing. Nevertheless, it doesn't affect any of the technicals. We're just back testing the channel. We get above this channel and we talk about maybe testing. We do think we're going to have a pullback and then If we need to cross over the channel, we think we'll probably test this pivot. This pivot goes all the way back to 2018, the megaphone here. So that's a really, really good pivot. And notice it's an area, so we can poke above it, and break back down. Okay, so when we're talking about this, and we get a lower move here, so we make a high, a higher low, and in the bullish, I'll show you a little bit later on the daily. If we start getting that ending diagonal, that if we break this high, I'm looking at an ending diagonal to probably retest this pivot before heading lower, but not making all-time highs. Okay, and then if we break down from here, the most conservative bearish scenario I have is just reaching the channel bottom. Okay. Other than that, if we eke out just a newer high here, then we'll redraw the channel and we'll break down from there, or we can consider it a fake break. It depends what it looks like, but we'll play around with that channel. Okay, on the daily time frame, and then we'll move over to SPY. On the daily time frame, we have that channel. This is kind of a bearish perspective that I'm giving you a visual of, an optical of the bearish scenario. And then on SPY, I'll kind of give that a little bit more bullish scenario, just from the traditional technical point of view. And so what's important is this blue downtrend line, we're tagging it. We reverse off of here, that makes this a valid trend line. Remember, 2 points don't equal a trend line. These pivots are super important. They only have 2 points on them, so that's why I'm calling them pivots. Okay, they're not valid trend lines yet, but either way, this is the bullish trend line for one of my scenarios, and this is the bullish trend line for another scenario. So either one, they cross right around where I think we might pull back. These two spots must hold. So if we break down, let me drag in a little further here. If we start coming back sharply and we start to just poke through this trend line, if you only have this one drawn, you might not know that it might just tag this one and then zip up. Okay, so either way, if you're bullish or bearish, I think we're coming down for a nice move, whether it's impulsive or a corrective move, a 3-wave move or a 5-wave move. That will be very important. I think this will hold probably the first time we get a bounce and then we start heading lower, or we get down here, we get a bounce and we continue higher. So that's the important thing that we're looking at. And I don't know if you can make it out, but if you use these here in this trend line here, you see the triangulation from 2022. You see price action, they're big moves, but you see price action getting tighter. And all we're doing is triangulating before we're going to break above this one or break below these. All right, so this is just triangulating. It's equilibrium. Some people call it equilibrium, where you have huge moves and they start to get tighter and tighter, where it's an indecision, where we need to come to an apex to where we're gonna break down or we're gonna break up. All right, now if we break up, you can fake break as well. You see we have our pivot here. We could go tag that, and I'll show you in a different point of view. Let's just go to SPY, and you'll see what I'm talking about. Because some people will have this wedge drawn in. So that will kind of negate this channel. We come down, test the pivots, hold it, and start moving up to the top of the wedge. We may not get a new all-time high, but this satisfies this a little bit more bullish scenario before breaking down. Okay, so a lot of people look at the channel, breaks above the channel. You said, "Oh my gosh, we're gonna go all-time highs. It's breaking out." Not necessarily. We'll have to look at these because I think this is a 3-wave move. All right, I count this on a lower time frame as a 3-wave move. And I think if we get a 3-wave move and we make a higher low, then we have it in the ending diagonal scenario plays out, then we're going to look for a 3-wave move up, 3-wave down, and 3-wave move to complete. So a 5-wave move, all made of 3 waves. But this is optically, traditional technical analysis, this is my alternative scenario where we make a new high, but not all-time highs. Okay, so if we break down from this point, we break this pivot, we're heading much lower at minimum to the bottom of the channel. So I'll show you both those scenarios on my Elliott wave. We have the top in. This says we have the top in. We have an A down, a B up. This top is good. We have a 1, 2, and we're working on wave 3. That should be an impulse wave, but we should see a 5-wave impulse move down, a reaction, and then a much more sharp move for wave 3, 4, 5, just to make a higher degree wave 3. So we should be able to identify what's going on by 3 waves or 5 waves. Now, my alternate scenario is that we have a sharp move down, getting everybody trapped in. So we have to use protection, you guys. We have the 618 where the 200-day moving average is, and the 786 is right where our rising pivots are. So I think this would trap the most people, traders, if we get to this area. You got to take profit. You have to use protection. I'm going to have call protection down these areas because I think we may get a bounce no matter what. Whether you're bullish or bearish, I think we're going to have another bounce and head lower, or we continue to rise, where this is the ending diagonal, where we have a 3-wave move up for 1, 2, 3, 4, 5. Tag the top of the trend line here. I'm just drawing this out. This is not exactly, it could go more steep, it could be lower, doesn't matter. That's my alternate scenario. Okay, so we really want to give you something else to look at. And so we have to look at all the indices, and they all like to give us clues. And by the way, on the daily time frame, we have negative divergence. We finally got negative divergence on the RSI, and we're starting to roll over on the MACD. So now we have something to compare to. I'm not going to go down to the 65 until later on if time permits, but let's go to... you know what? I better just do it now because we're going to compare these situations with the IWM, and I don't want you to miss out on anything. So this is kind of this is our rising pivot to the upside. This is our trend line to the downside if this holds here. Now we're looking for a pullback, and if you notice this wedge in these light areas, this a wedge formed a wedge here. All we'd be doing in a bullish scenario, or the bearish where we're going to get a bounce, is back testing the wedge, I think, and that goes right to the 419 area, which is the 786 retracement. The 618 is at the bottom of this green profit zone that I'm going to be taking some profits. That's at 426. So we have this full area that it could still go down to. So what I suspect, if this is, this is either impulsive 5-wave move down, and then we get a reaction bounce, or we get a 3-wave move down. It should be pretty. I bet you the market never makes it easy, so it's probably not going to be completely clear on what's happening. But what is clear to me is that this is a 1, 2, 3, 4, 5-wave move down. You have a small ABC correction, which is so you have a 5, 3, and then 1, 2, 3, 4, 5. Wave move up for a zigzag of 5 through 5. All right. So again, pulling back, it's going to be super important to watch your retracements. Pulling back to this possible 618 area with an ABC. I doubt it'll be that defined, but if it is, great. Maybe that'll be a 1, 2, and then 3, 4, 5, which would be an impulse move, brings us down to 786, and then bounces. We'll be looking out for that. I was playing around with these lines here, so that's some projections I was looking at, but we'll have to watch price action. We could come down all the way to that 319 area that I was talking about at the 786. All that would be doing is backtesting the wedge breakout. The breakout from the wedge, we have support here. We have a gap here. We have all this confluence. We have our rising pivot. All this confluence. That would draw in the most bears and the most bulls to drag people in. So we'll see what happens. We'll have to watch the indicators. If the indicators are forming divergence to the upside, positive divergence, and getting highly oversold, then we have to look for a bounce. And then it's likely not to fall straight through. Okay, let's go to IWM. Super important. I look at all these. I don't focus on IWM. I focus on big tech. So Qs are more important, but this can give us clues. And it's tradable as well. So here's from our monthly time frame. We're in a channel. We backtested the mid channel, broke down, hit that 100 month moving average, and from here it could be a 1, 2, 3, 4, 5 into the channel bottom. So that's a possible scenario where this is an ABC and it's done. Now, if the market decides to go higher, needs to go higher, IWM could lead the way. It does have the most energy and I'll show you on the lower time frames, it could backtest all the way back up here in a couple months. All the way back up to this mid-channel trend line. All right? But it'd have to get above all these. We're fighting with the MAs right now. And so we're just kind of moving sideways at this point. Do we break down? Do we break up? And I'll be able to show you a little bit more in detail. So right now, this is a very important pivot. The 170, clearly important. You have the highs here of 2018, of 2020, a broke out extreme move from this 170. This is so important. We tag. To me, it looks like a descending triangle. And when we break down from here, it's going to be massive. That's what it looks like to me. A move like this to the downside. Okay, so if we start testing and breaking above this pivot, then I think we're going to head to this 212, 215, around this consolidation area. All right, so that creates support now, resistance around 215. There's spikes through it. It could make it all the way to the midsection here at 220. We'll see. But let's go down to the daily so we can get a perspective. And then I'll show you the Elliott wave. There's 2 counts that I have on this. And it's important to look at these 2 counts in IWM as well, because one is going to match what the market overall is doing. So we have this channel sideways. I have this drawn out for you. It's a sideways movement. We're still in the channel. This is the midpoint. We tested that midpoint and we're consolidating right now. So 65-minute chart is going to show us a trade setup. So make sure you stick around. Hit that notification button. Don't forget to like the video. Thank you very much. Okay, so we have a 5-wave move down here. So that could mean 2 different things. Is this just a new 1? And we're back testing for 2, or is this a whole 5, 3, 5, and now we need to correct higher? Those are the 2 questions that are going to match the market. Is the market done now? And we're going to head lower, or is that market going to get that ending diagonal scenario with the IWM pushing the market up? Maybe the Qs are done. Maybe the Qs don't need to move much higher, but IWM is going to launch. We'll see. Now we can look at the 2 scenarios. Give you a visual. One is our top. This to me, I think we have a little bit of room to run. I'll show you in the 65. We hit the 50%, had a reaction off it. We're consolidating under it. I think tomorrow or Monday, we hit the 185 area at the 618 retracement. Yeah, we can go higher. Yes. And is that likely? I don't know. Maybe the pivot lines up with it. I didn't check that out yet. Okay, so maybe we go all the way up to the 786 where the downtrend line is. It's possible. It's not the point. But either way, we might get a little trade in here up to the 185. So this is the bear scenario where this full move, just like the market, is A. We have an A, B, C for B. And then we have a 5-wave move down for 1, 2, and a much larger move for a wave 3, much slower, 4, 5. And maybe that's done, or maybe that's just a 1, 2. This A can be a 1 as well. This can be a 2 for the B, and we had much lower. But it doesn't matter each scenario because you're going to do the same thing. Now, here is the bigger correction. Here says the market is going to go and make intermediate highs, not all-time highs, intermediate highs. Now, this would mean that all of this is an A, B, C here, just like the other scenario, but that's just a larger degree A. Then we have an A, B, C for B, and then a C ending for all that equaling an A. And then what we're looking for is possibly a zigzag. This ABC can be done technically if it breaks down from the triangle that I'll show you on the lower time frame. It can be done here. You get our higher low, just like the market. Get a reaction off of here. Instead of going lower, we move much higher to you see that 212 area, 215, possibly to 220. That's this zone here. Do we know which one it's going to react off of? Which one's going to break down from? We don't know. But that is the area we'll be looking for another reversal if this is the case. So that being A, B, C into a B, and then C much, much lower. And again, this can be a 1, this can be a 2, and this can be a 3 down. That's not the point right now. The point is we have both bearish scenarios. One just moves higher than the other. Okay, so I hope that helps on how that's going to react with the market. And if we see those things happening, it helps us to hold on to trades, to reverse our trades, things like that. So right now we're breaking down. We have this trend line here that's holding on. We made it to that 618 retreat, or the 50% retracement, pulled back pretty hard, and now we are getting consolidation. Now, after making this move, this is in my opinion, the bear scenario. We have our 1, 2, 3, 4, 5 for an A. We're looking at a zigzag, a 3-wave move down for B, and then a 1, 2, 1, 2, 3, 4, 5 for which wave 4s have triangles in them. So an A, B, C, D, E, and tomorrow I think we break out into Monday higher, make new highs, and then possibly retest that 786. And I think I might have that drawn out for you. But the important part is that I don't think this is an ABC done already. I think this is a wave 4 that we're getting a triangle. It's tightening up, and we break up here to that 100% and that 618 retracement. And this 100%, that would be our target from the size of the triangle. So when you have a triangle, you take the length of the triangle, the biggest part, and then you place from the breakout zone, which would break out from the apex right here, And that's your 100% measured move. And it coincides with that 62% perfectly. And if it gets a little higher and tags at 186, fine. But this is a great target to take profit at the 184.55. So that's our trade setup. We break out from this triangle. It's already right there at the apex. Break out from there. Take that IWM possibly expiring into next week if you want to hold on to it. And then this possibly get a follow through into Monday for this 618. And then turn around Tuesday, IWM should be weak. So what's the theme of this? I think IWM is going to stabilize what's happening with the market on Friday. I think it's going to stabilize. It's going to hold the market up at least a little bit. I still think we're going to get a reversal doji on the weekly time frame for SPY. But this is the trade setup I want to show you. I think this is going to hold the market up for a little bit going into Monday. And after Tuesday happens, I think the market really, really starts to turn down. But I think SPY and Q's already, if not eke out a new high, I think they're already done. I'll show you real quick on SPY. We have that weekly candle. Remember, the week's not over. We have Friday. And so on this weekly time frame, I do think we start rejecting. I think we get some sort of doji. I don't know if it's going to be what kind of graveyard, spinning top. I don't know, but it could be, we could get lower. But I do think we get some sort of reversal candle from Friday. I think the Qs will lead that, but I think IWM prevents the market from tanking. That's my point. I think we have our huge move on the weekly. We get a doji here for reversal. We get that reversal next week. And back down to the daily. I wanted to also show, and we'll do the Qs tomorrow to represent, since they won't get the 9 count exhaustion until tomorrow, then I'll represent, that's why I'll do the Qs. But yesterday we got our alert that our 9 count exhaustion we got right here at a doji candle, right here at the channel top. I think this is near or has a reversal coming. There's no confirmation. We need a candle to break down underneath this daily candle. So that is a sign of exhaustion. We had one before that was about to occur, but then this correction here, 1 day correction, negated that, and now we have another 9 count signal. On the Qs tomorrow, we'll have, being Friday, we'll have a 9 count. We have an 8 count today. We'll have a 9 count tomorrow. Actually, it'll be a 9 count. So a double 9 count exhaustion. And I think we get our reversal from there. And so I'll show you the Qs along with a couple big tech stock tomorrow. But what I want to point out is that IWM is in a posture to roll over as soon as Monday. But I think it's going to hold the market in place enough to prevent it from tanking until next Tuesday. So I think next Tuesday or sometime late Monday, I think we start to really get our reversal. And then we have to see if we're going to get a higher low or if we break down much, much further. But either way, I think we're going to get some sort of reaction off of these lower pivots to have a bounce and then even lower. But we're traders. We'll turn on a dime if we see that everything is way oversold, and it should give us clues to whether we start making new highs. All right, thanks for joining us here, Options Center. Happy Thanksgiving. We will talk to you soon. Don't forget to hit that like button and the notification, because we will be doing these videos often.